Welcome to today's Employment Standards mini overview on payment of earnings and deductions. Thank you for joining us. Before we begin, please be aware of our disclaimer and copyright notice. I'll give you a moment to read about it. Basically, we've made every effort to give you the correct information, but if there are any discrepancies between this presentation and the Employment Standards Code, the code will prevail. Please note the copyright on this presentation belongs to the Government of Alberta. Employers must pay their employees at least once a month or use one of the following pay periods listed below, be that daily, weekly, bi-weekly, or semi-monthly. Earnings must be paid within 10 days after the end of the pay period in which they were earned. Employers may choose between two time frames in which final earnings are forwarded to employees. Employees must receive their final pay within 10 consecutive days after the end of the pay period in which termination occurred, or 31 consecutive days after the last day of employment. On this slide, we visualize when pay needs to be provided to employees. This employer has pay periods that occur bi-weekly and end on every second Saturday. The employee gets paid every other Friday, about 6 days after the end of the pay period. In this scenario, the employee quits on January 23rd. Let's see when the employer must submit final earnings to the employee. According to the rules, the employer could choose to pay the employee within 10 days after the end of the pay period. If the employer chooses this option, they should submit final payment by February 4th. The regular pay day for the period in which termination occurred would be on January 31st. It's likely the employee's final pay will be on that date. With the payment occurring before January 4th, the employer is in compliance with final pay rules. But how about the second option? The employer may also pay final earnings within 31 consecutive days from the last day of work. That day is February 23rd. As long as the employer receives their final earnings by February 23rd, the employer is still in compliance with the rules. The day of termination is not as important for the first option. The important date is the end of the pay period where termination occurred. So if the employee quit any time within the second pay period, let's say on January 12th, near the beginning of the pay period, the employer still has the same time frame to pay as though employment ended near to the end of the pay period. The employer should make the final payment by February 4th. However, for the second option, if employment ended on January 12th, the employer must submit final payment by February 12th, which is 31 consecutive days from the termination date. How earnings are paid. Employers must pay an employee at least the minimum wage. Employees must be paid in Canadian currency, and employees may be paid in cash, check, or similar document drawn on an insured financial institution, such as a chartered bank or credit union. Employees may be paid by direct deposit into an account of their choice in any recognized financial institution. Employers may provide a statement of earnings through electronic formats. Electronic statements of earnings are acceptable as long as employees have confidential access and can print a copy of the statement. Employers can deduct overpayments without an employee's written consent for the following: overpayments resulting from a payroll calculation error that occurred within 6 months prior to the deduction, and vacation pay paid to the employee prior to it being earned. Employers must provide advance written notice that the deduction will occur to the affected employee. If an employer notices in their records today that there was an overpayment or error that happened 8 months ago, this is then beyond the 6-month limitation, and the employer could still make the adjustment as long as they have the employee's written consent. It's important for employers and employees to be reviewing their records and pay statements often enough to catch any concerns before too much time passes. Listed here are some permitted deductions. In general, employers may take these deductions as needed without the employee's consent. Usual deductions include federal or provincial income tax or other federal requirements. Additionally, judgments, court orders, or union fees can be deducted as well. Otherwise, an employer must obtain authorization for other categories of deductions, for example, a social committee fund or monthly cafeteria fees. Meals and lodging, if provided by the employer, may be deducted with the authorization, but have maximum amounts which are listed on the slide here. Note that employees cannot personally authorize deductions, and employers cannot deduct for faulty workmanship, which includes accidental damage to an employer's vehicle or equipment, cash shortages where more than one employee had access to the cash, or cash shortages resulting from a failure to collect all or any part of the purchase price from a purchaser, as well as breakage in a restaurant and mistakes in production. And then uniforms or special articles of apparel the employee is required to wear during their work hours. If an employee does end up signing off on a prohibited deduction, an employer is still not permitted to make that deduction. If a server has a table dine and dash on them, they cannot sign an authorization to deduct that bill from their earnings. If an employee has an accident where the company vehicle is damaged, they cannot be required to pay for those damages from their earnings either. Please note, personal protective equipment, or PPE, is not considered a part of a worker's uniform under employment standards. For questions regarding PPE requirements, please contact Occupational Health and Safety toll-free at 1-866-415-8690. And that brings us to the end of our mini overview on payment of earnings and deductions. If you would like to learn more about various employment standards topics, such as the ones listed on the screen, please scan the QR code to be taken to our website. Also, if you have a question, wish to make a complaint, or submit an anonymous tip to employment standards, please scan the QR code on the screen or call our contact center at 1-877-427-3731. Thank you for viewing today's session on payment of earnings and deductions, and we hope that you have a pleasant day.